Hello, Warriors. How's everyone doing? Fine, I hope. I hope everyone did okay on the Fed yesterday.
Good early morning, Dale.
Hi, Kman. How are you?
Yeah, not too bad. I was about to say TGIF. I don't know why, but
it feels that way to me too.
Oh my God, I'd really love it to be Friday already.
It feels like Friday. So I want to start with the gold-silver ratio, which I showed up here as a 3 drive, and I think we're on the verge of it's a pretty ugly weekly candle unless something else changes. And then if we get back under 87, this could be important. What happened in the metals?
Yeah.
Right. So especially with yen, follow through to the downside, didn't have enough juice to get to 138, 7.5 was it. What are you thinking here after the Fed on, I'd say the feature was, at least there was follow through in the yen from its decline.
Yeah, there was
follow. Go ahead.
There was indeed follow through in the Asian session. There's a couple of speakers around, didn't say too much, but left the door open perhaps to at least some discussion surrounding monetary policy, but saying it was too early to change. But then I saw another interesting article saying that the Japanese investors have actually been shunning US bonds of late because their hedging costs are too high due to the yen weakness. So it might also have been a part of end of month stuff, but at least the dollar yen had followed through, coming back to quite important levels. We're not right there, but somewhere in the mid 134s to 135. It's a pretty important zone on the dollar yen for sure. And to come back on your gold silver ratio, I think the silver is looking a bit promising right now, and I also think that if we get a slightly better than expected GDP, looking at silver being an industrial metal, I think this gold silver ratio has a chance of dipping further.
Okay.
Yeah.
And I just wanted to get back to the yen. It's the first 2-week reversal, which is, we still have tomorrow. But it'll be the first time in quite some time that probably all the way back down to here, is that we've had the market on a weekly basis take out the 2-week off number, which is 138.48 from 2 weeks ago. So it looks like you have a 2-week reversal. This 9-week moving average is holding it. Looks like there's a lot of space if we start to break down, maybe back to these highs of 131 if we take out that 4.5. What do you think? Kman, Brian?
Yeah, hi Dale. Morning,
hey,
mate.
Buddy.
Oh,
hey,
sorry.
Buddy.
Yeah, I was my mic.
That's okay.
I say,
that's okay.
But then look at the similarities of the move of the one that you highlighted, the one before.
Right there.
3 weeks lower, and then we start to go to new highs. It could be kind of a similar thing, right?
Could be.
Ryan was also talking about that the box is pretty much overlaying. Could be a nice overlay with that if you copy the box from 131 down to 126. It could be the similar kind of thing here, and there as well we've been below that moving average that you line. But then really bounced very hard. I don't know where exactly the daily Ishimoku is, but I think it's still quite a bit lower. It only comes in at
maybe it's a little more, maybe it's more vulnerable up here because it's more stretched than it was down here.
Yeah,
if you put that chart onto an hourly or 4 hourly, something like that, Dale, I'll show you what I mean. So if you zoom out a bit on that one.
How do I zoom?
Just back down with your mouse wheel.
Ryan, why don't you just grab the charts, mate? Good morning.
Yeah, I've taken the boxes.
Thanks, Steve.
Yeah, no worries, mate. Give me a second.
Steve, will you be okay with Ryan's black background?
I'm no problem whatsoever.
All right. Some people, you know, they technical
to-
analysts don't
He
like
he
that.
he's a dark guy. He's the new Batman. I don't know if you knew.
Every company needs a Batman, Robin.
Yeah.
Yeah. So I've actually taken the boxes off, but if you look at this, let's see if I can put them back in again. You look at this price action April, May.
Oh yeah.
It's setting up a bit similar to what we're getting at the moment.
Yeah. It's like a fractal of it.
Potentially, yeah. I mean, what we had over here was, we were looking at the support of the break level around 127s, and that broke, and we got that extension down to another break area. The same type of price action happening here. Made a high, then we've just been slipping down, higher, lower highs, lower lows. 135 looks to be this phase is 127. And 134.40 looks to be the line in the sand, like 126.30s was back then. So you can never say that it's going to move exactly the same as what happened over here, but it gives you an idea of what are the key areas to look at. If the trend is going to break, that's at the 38.2 fib as well. If the trend is potentially going to break, these are the levels it's got to knock out. If it doesn't, if it holds them, then it keeps the trend in play, and perhaps this is just a natural refresh of the trend, which is
because I know a lot of people were talking 145 a few weeks ago as some type of technical target.
Yeah, when we've got this, when we're sitting in this move, everyone's talking about 145, aren't they?
Right.
But now we're at 135. How many people are talking about 145 now? It's just.
I sense that you think there's a chance for that.
I think it's still possible. The trend hasn't broken. When you look at the longer term picture, this hasn't broken at all. Look at it. It's up and up and up and up, and it's the velocity has changed in this last phase this year. That's the big key thing. The velocity of the move has changed. Of course, it can continue going higher, but you're going to get pullbacks, and it's what those pullbacks do that send you the message. Are we going to crack the trend or bounce off an area like this and then shoot higher? It gives us the levels to trade. That's all we want.
Right.
Whether it goes to 140, 150, 180, back to 112, it doesn't matter. We trade it as what happens in the price action. That's all we can do.
Why the big give back in Euro today?
I think there's a lot of it was overdone yesterday. The moves. I've had the perfect example, Dale, of getting a trade right but the execution wrong. I jumped into a short last night after the Fed 102.03.
Yeah.
Didn't like my entry. I was banging on about. I'm looking at the up towards these recent highs, 57s, 80s, up towards there. I didn't. I jumped in right in the middle. The exact thing I warned against people doing.
Like FOMO.
Yeah, I didn't. I knew we were going to potentially get this move. I just didn't have conviction in my entry, so I nearly folded it this morning. Then we got a dip under, so I took 16 pips for half, set my stop negative 16 on the rest. So if that got blown out, it was a zero-sum trade.
Yeah.
And of course, I got ticked out right on where is it? I'll show you where I got ticked out.
Yeah, frustrating.
Right in there.
Yeah.
Right on that candle there. I had my stop at 19. That was my minus 16, and vroom, there we go.
So I think people could understand how traders could get ulcers.
Yeah.
And people can understand why I never trade intraday.
Are you just putting positions on at the close now, Steve?
Not necessarily.
Intraday.
Not necessarily, but my biggest point here is that I find it a lot easier to sleep when you take positions with wide targets and wide stops because you're looking at a longer term horizon. You know what I mean?
Yeah. Oh, do I ever? Especially in the last 7 months, it's really been that way. I think the algos are having a great time picking off stops everywhere.
when I was trading in a different, more short-term way in the past, I found my way. I find myself waking up in the middle of the night very frequently. You know what I mean?
Yeah,
Looking at
checking
my
it.
phone.
And he wasn't even peeing.
Yeah.
Yeah, he's
Looking at
still
my
too
phone.
young.
That was a
Oh,
bad joke. Sorry,
Blake,
bad
no,
joke.
Blake, you just gave, you're starting to get an enlarged prostate, and that's why he brought it up. You're making a few trips at night now, aren't you, young
Yeah,
man?
might be. Anyway.
Maybe.
Anyway, good morning, guys.
Hey,
But
Blake.
Steve just saying that there's obviously a lot of different ways to trade the markets. There's people like Steve that like to take positions and widen the stops and just kind of sit in positions over a few days. Stelios only trades silver once a year. Ryan,
Or even less.
And
It works, though.
I'm joking. But and then there's those of us like Ryan. I know Kman, myself. Oh my gosh, we trade like I probably put on at least 5 new trades a day, and if it's an active day, it might be 10 to 15. So that I'm in and out. So there are definitely different ways to slice up this.
You're a machine, bro.
I think it's just it's one of those
Sex
things
machine.
that I grew up as a day trader in the business.
What a surprise.
What's that?
I said you were a machine, and Steve had to throw a little sex in there.
Of course Steve did.
You're a sex machine, according to Steve.
Yeah, that's
At least that's what his wife says.
Yeah, that's right. Anyway,
Happy wife, happy life.
So hey, guys, I wanted to point out, and good morning, by the way. I wanted to point out how the euro is just acting like absolute garbage. Have you guys taken a look at all the euro crosses yet, Ryan?
We're going to start moving through them if you want. Do you want to take it, or do you want me to go through it?
It's up to you. I know you did the flow show this morning. You know what? I'll take it. And I'd love to
let me take one. Let me take euro sterling, because I've just closed out my long held long on this
So
one.
have I, by
Okay.
the way.
Now,
I
what a
didn't have done that this morning.
disappointment.
It's just not playing ball.
No.
I've been saying it for the past week or so. I'm giving money to the broker on the carry costs, just sitting in it. My average is 83.50. We've had this is a bit of a break here of this zone here. I don't want to sit in it all summer, especially when I'm off on holiday. So I've taken it off. I've made a few pips out of it. I was offloading some of it up in the 86s, 87s when we got the moves. But when you look at something and think it ain't working, and I'm not going to bleed money to the broker just for sitting in a trade. So I'm out of that today. 47s, 48s. I got out 80. My average was 83.50. So gave a little bit back on those, but I'll come back from a holiday, and if we're down, if we see moves lower, maybe down towards the 81s again, I'll look at it again and maybe try again. But I'm done with this for now.
All right. Very, very good. And I mean, that's one of those positions that I think that is weighing really heavily on the euro as a whole. Because when I look at the euro dollar, it's like man, it is just acting like crap. But it's like this euro sterling breakdown. It's for real. And yesterday, when it broke the 84 pence level, it was like, okay, well, the next stop's the 127% extension. We tagged that this morning, and now we're getting a little bit of buying from there as we reach oversold conditions. But if you want to know why the euro is just so weak, just take a look at these crosses. I mean, the euro Aussie is just getting smashed, and this is a risk on type of move too.
We showed that days ago.
Yeah. I mean, we've been just playing the short side ever since we cracked this trend line here around the 149.50 level, and it's just been kind of just sliding. I've had open orders out to sell this thing almost on a nightly basis. I only got triggered a couple of times, but I'd get short while I was asleep in European trade, and then I'd get up in the morning and cover a position, and but that only happened like twice, and I've had orders out almost every night for the last 2 weeks, and then I just get up and cancel them if they didn't get triggered. But that's just what an easy slide that's been. I mean, there has not been much of a any air taken on a daily basis on the Euro Aussie. Euro Kiwi continues to soft, but we're approaching at the 618 retracement. And you know, the Euro Swiss, one thing I did want to point out, and maybe you guys have a little bit of flavor here, is the Euro Swiss may be down today, but we're not making a new low. And that is alarming to me. If you're short the Euro, it's like this has been the leader. So Kman, Ryan, Stelios, Steve, you guys have any opinions here? Because I mean, the Euro Swiss is at all-time lows.
Bit of S&P smoothing, maybe.
You think the Swiss National Bank is trying to curb some of this?
Possibly. You can never rule them out. You know, they don't come and lift it, but they'll steady the drop, if you know what I mean.
Yeah. Kman, did you have an opinion here
about the Euro Swiss? It's really a slow grind lower. But what I really notice is that since we've broken below parity, it never even had a sniff at it anymore. This thing is still heavy. S&P might be trying to smooth a bit of the moves, especially now with the euro having so much weight around its neck. That is possible, but I wouldn't look at Euro Swiss to judge euro strength right here and now, because we still have the S&P in there at times. Although lately, if we see the weekly side deposits in Switzerland, they haven't been intervening much, if at all. But the rest of the euros, you were asking the euro weakness. I'm still short euro process. I'm short euro Mex, euro Canada, euro Aussie.
You continue to milk that cow. All right. Very good. Steve, I know you've been active in the Euro Swiss in the past. Are you seeing anything down here?
No, I mean,
listen.
Okay, you can look at it like this channel, but I think you have to go back to the 2015 lows to, if we get a test of those, to see whether they are really in. And I see you have about the same level as I have, although every bank will have a different level of that low.
It's feed related, right?
Around there, it could be. I have as you see that extension. We spoke about that before. You see the 1618, the 9630. I have that as well around the lows, that the 2015 lows. So perhaps they will come out and say something if we ever get down there.
Yeah, this spike low is going to be dependent on the data feed that you had that day. Some people are beyond it. This is not relevant to me because I know it's somewhere down here, but it just depends what feed you're looking at. Steve, I'm sorry, you were saying just a moment ago.
I went over the Europers very specifically yesterday. And Euro Swiss was one of them. I specifically said that, in my opinion, the S&P has clearly abandoned its previous failed attempts to, in essence, put a floor to the pair, and they've probably had to embrace Swiss franc strength. Because if they really wanted to keep fighting, they wouldn't have hiked, right?
Yeah.
So in my opinion, it's probably a bad idea to try to fade Euro Swiss weakness.
Yeah, I mean, with the Swiss National Bank unexpectedly raising rates, it's definitely attracting a lot of Swiss franc capital at this point. So it's going to be interesting to watch. And I'm, as Kman just pointed out, I'm not going to use it to really gauge euro dollar strength, but I will say that the euro crosses are, and I'm looking across the board, they're all near some pretty key support. Yesterday, I was trying to actually buy the euro dollar on an approach to the 618 retracement. And after yesterday's FOMC, I didn't think we were going to get there again. But here we are, and we're closing in on that. There's a couple things I want to say about the Fed, and then I want to hear some comments. But we also have GDP numbers coming out, which is going to be, the market mover today.
Before you do that, I know that you were looking for a breakout in Aussie. I believe I saw the alert saying we got it. You believe it?
It's like everything today. We're going to need confirmation from today's GDP data.
Go ahead.
Let's look at the Aussie just really quick. We stopped at the 50% retracement. We're at there's a channel resistance we've been looking at for the last 24 hours, and even following if you go here to ForexAnalytix, this is where the analysis intraday, you can see comes into play when we've been pointing out these channels over the last 24 hours or so. In the Aussie dollar, you can see all those previous charts. So it's still holding, and so I'm worried that we're going to need to see the data confirm I want to say it was a pivot, because it really wasn't a pivot, but it kind of is a pivot regarding the Fed. It's like a slight pivot, but anyway,
Stelios was one of the first to say that could happen.
Yeah, and Stelios, I mean, he was right there. And look, the Fed said we are in neutral. And this is something that I was talking about last night with Chris Weston. But when you're doing like a car analogy, and if the car is in neutral, I guess the question is the car actually stopped in neutral, or is it still coasting in neutral? So that's it's gonna
Blake,
it's on a hill.
I mentioned yesterday on the morning edge as well that, in my opinion, the market was looking to grasp on anything that would precede a potential pivot from the Fed, right? So yesterday's statement from Powell, I think, was perceived like something like that, because the market now thinks like, okay, he's starting to give some hints that we're getting closer to neutral. So they are one step closer to saying at some point, listen, we're now in a recession and we need to take care of the economy, along with inflation, right? So I do totally understand why yesterday's reaction was, a bullish one having to do with risk assets. I totally understand it.
Steve, boys,
yeah,
let me jump in. The S&P have just come out and said they may take monetary policy measures at any time between regular assessment dates if circumstances so require.
And there went the dollar Swiss. So that means the Euro Swiss just absolutely just pooped the bed just now. Thank you, Ryan. Appreciate that. Oh, there we go. And just as we were saying, hey, the Euro Swiss has been holding up and it hadn't hit new trend lows. There we go. So just as we're talking about it, interesting. And
come on, be honest. You knew about the statement, right?
Yeah, I knew that they were going to be coming out just as we were talking about. But Kman, good call there, not to be fading that, because I don't think that's a good idea either. If one of the other things I should point out with the euro, the dollar Swiss, this is a chart that I think is important. Sliding back down towards channel support. This is where if I wanted to be long dollar Swiss, I want to sell Swiss franc, this is where I'd be interested, and that's just a major breakout point that comes in around just sub 95 cents. So that's if you like being long the dollar, maybe that's the place to do it. Hey, let's talk a little bit about the dollar, because this has been a big topic of conversation as of yesterday when I was on the trade-off last night. I made a point to tell the Australian traders last night that I'm not in the dollar is doomed and camp. I'm just really not a euro bull, and I was talking about that about 8 hours ago, 10 hours ago. Euro's really come off here, but it's really the euro crosses. I still think that you can play the dollar to the downside. To the short side, but you got to be very selective on how you play the dollar. If you want to play the dollar short, try not doing it against the euro. So what would you guys say if you had to play the dollar on the short side? Where would you guys do it? What are your thoughts?
Long metals.
So all right, forget Stelios.
This guy's so boring.
Go to Steve. What would you say, Steve?
Long metals.
Okay, forget Steve. Let's go to Ryan. Ryan, what would you say?
Come on, Ryan. You know what to say now.
Euro dollar. I'll try into parity again.
This guy is so boring.
No. If you had to play the dollar
Just
on
say
the
long
short
metals,
side, where would
If
you
I had to do
play
what,
it?
right?
If I held a gun to your head, Ryan, and I said you're going to short the dollar, how are you going to express that? What would you do it?
Well, right now,
Yeah.
well, I wouldn't.
You got a gun to your head.
There's a gun to your head, mate.
There's a
Pretty sure that
theoretical
with the
gun to your
gun
head,
of your head,
Ryan.
you would.
No, if you put a gun to my head, I'll take it off you and throw it in the bin. I can't trade like that. I don't trade like that. I pick my levels and I trade my levels.
You
know,
are
I
no
don't-
fun. K-Man, what would you
Yes.
do?
What are you short? What are you long of, Blake, against the dollar?
Blake,
I'll agree with you.
You guys all
Just to keep you happy.
All right, you guys all suck.
But if I
All
had
right.
a gun to my head,
Well,
I'd say,
thanks for
yeah, I'd
asking.
say-
I'd buy a break in Aussie and sell a rally in Canada. I
There we
would stick
go.
with
Thank
the
you,
commodity
Dale.
currencies.
You can't wait. You
Thank
can't
you,
wait for your
Dale.
level, Dale.
Huh?
You can't wait. Pick a level. You gotta.
I mean, you go to a monthly chart of Aussie and Canada. We have a reversal month in the making with 2 trading days.
Yeah,
left.
and I think we're coming out of a descending wedge. I'm with you.
Yeah.
I'm with you,
Anyway,
Dale. I hear you,
we're-
brother.
Okay,
All right.
buddy.
And I'm sorry, K-Man, what did you say?
I say if you put a gun to my head, I would not do euro dollar. I would trade other stuff, probably metals.
God, you suck too. Oh, you and Stel.
Love you,
Stelios is very
Kman. Love you,
influential.
man.
It's
Very
a conspiracy.
influential.
Hey, you know what? Really quick, let's just point out gold is really everybody knows, especially in the ForexAnalytix community. I think these numbers have been literally the same for the last week. Looking for gold at 1675 to 1750, and we've written that number down a bazillion times, and we went to 148.55 spot today. It's really key, and if you really want to attract buyers into the gold market, we've got to get above 1750. But look, silver looks great. Silver's breaking in a descending wedge here. It's also the long-term 618 retracement from the COVID move. You got silver right here. So, I know you guys are all, bullish on silver or bullish on, precious metals. And I don't disagree. I'm just harassing you guys. But I actually think they look fairly constructive here. Now, we have GDP numbers coming out in less than a few minutes. What we'll do is we're going to just keep an eye on the dollar yen. But we're going to pull up, not just the dollar yen. We're going to pull up the S&P, see how the S&P responds to this. We'll have the dollar yen. Matter of fact, I think I might even bring in really quick. I think I'll bring in gold just to keep an eye on it. Do you guys have anything that you're looking at in particular, as we head in this GDP number? Let me ask you this real quick around the horn. Steve, are we in a recession here in the U.S.?
I've said that months ago. We are in a recession, and
Okay.
no matter how many times they decide to change the definition of a recession, I think we are in a recession, and I think that the overwhelming majority of the chances is that it's going to get worse and not better in the third quarter.
Okay, that very good. Stelios, what do you think?
I think we probably are. We're expecting a positive, right? Is that 0.5 quarter on quarter expected? So, but I think it's going to be negative. So I think we are in a technical recession. Yes, and let's not forget, numbers are becoming more and more important now. The Fed told us, so we have to be watching carefully.
Data matters, kind of like the size matters.
Yeah.
But it's true. Data does matter. Everything is data dependent. The Fed yesterday told us it is. And we have 2 months between now and the next Fed meeting. So every data point, we're going to see volatility in the U.S., especially outsized data. That's why it's important that you're in front of your computer throughout this summer. Dale, what do you think about?
You have an extra Fed meeting on the 25th of August, right? In
At
Jackson
the
Hole.
Jackson Hole. Yes, we do. That's one way to think about it too. Yeah, absolutely. Hey, Dale, what do you think? Recession, no recession?
No recession
Okay. K-Man?
next year.
Next
No
year. I'm with
recession
you,
yet.
Dale. Look at Dale's my brother. Okay, go ahead. K-Man?
No recession yet?
Oh wow.
Next year.
Not till 2023.
I
Takes
haven't said
monetary
that.
policy some time to filter through.
There you go. Kman, recession, no recession?
I said no
You said it.
recession yet.
Oh, you said no. Ryan.
Tomorrow may be different, you know.
Ryan, what do you think? You got 10 seconds.
No recession, and I'm going to laugh if the number's positive because the
My
market.
hairline's receding.
That's right. It's because it's fudged. All right, guys, heads up. Here comes the data.
Let's
All
see.
right. Dollar yen, S&P, and the dollar is under a little pressure. Gold is rallying. S&P
Oh, minus 0.9. Is that right?
That right?
I saw a minus 0.9.
Yeah, that's right.
Holy moly. Steve, I think
Give
we
me
deserve.
give me credit.
Oh my
All
God,
right,
we're in a recession.
You know, in every bad number, there's a silver lining. Oh, sorry.
Well,
That's
there
a
was
pun.
no silver lining. Look at the revisions too.
Yeah.
Revised it down 1.6%. Wow.
Give me
So
credit. I told you
here's
since
the thing.
February. Come on, pat my back.
That's bad data, and that's going to be bad for stocks. I mean, because you know it's fine when you have data that's kind of good or kind of bad, but when it's really bad, you know, people are like, "Oh yeah, it's really bad, so stocks are going to rally." No, I don't know, man.
I'm not sure about
But it's not
stocks.
overly bad. It's not overly bad. You know, sales advance is up 1.1%. You know, it was down 1.2% in Q1. You know, consumer spending 1%. You know, there's no. It's reflecting what we've been seeing. Some elements of the economy are softening, others aren't. It's not all going in one
Yeah,
direction.
but Ryan, I need to remind you that's how always recessions begin, by some elements of the economy initially showing bad signs, and then the rest of them turning as well.
Yeah, no, I don't disagree with you. I'm just saying how it is on the data.
No, I agree with what you said, but just a reminder, not every element, you know, turns like immediately, right?
No, I agree. But it just means the difference between a proper full-blown recession and something that's a bit wishy-washy.
All right. Well, you know, I just want to say that the data, we're going to have to watch price action right now because stocks are coming off. Let's see where we're at, you know, because this is where the S&P is trying to break out of that 40-15 level. It's not really doing so. But Dale, I know you have an interview, and we need to let Dale take over. I want to thank everybody for being here today. You know, come join us in the ForexAnalytix community. It's only $1 for the next 10 days. Come join our community of traders. Dale, I'll pass it over to you.
Thank you,
Thanks,
Blake.
team.
Thank you, team. Some very interesting banter and really some good insights today, guys. Thanks a lot. And Thomas, how are you? Welcome back.
I'm fine, thanks. Yeah, that was a well,
Shocker number.
kind of, yeah, not to us basically, but yeah, it was a shock, kind of. You know, was the I haven't had time to look at the revision. Was the revision for the Q1 even lower? Was it minus 1.3? Yeah, okay.
Yeah.
Well,
yeah.
congratulations, you are in a recession now then.
Yeah, well, things are good. You know, it's the best of times and the worst of times. So
yeah,
you know, I'm looking at these numbers and wondering what you're thinking here. You know, gold took a pretty big hit. It's trying to recover here. Same with silver. I know that last time we talked, you liked gold and farmland, and that was it. So, did you bring anything to share today, buddy?
Yeah, I have some graphs. We can continue that, but few words about the gold. We have a like long position on gold. Like not we don't have it, but we are proposing like, let's say, a 3-year position now.
Okay,
so
3
it's not,
years.
you know, it's true the recession and crisis. But I think we can continue on few. I made few slides just to, you know, I think this will be fine on the.
And I was thinking about you when the spreads blew out between Italian bonds and the rest of Europe.
Yeah,
and
I know that now the ECB is trying to get it together with the TPI, transition protection. I don't. Yeah, it's a strange concept. We haven't had really like time to look at it yet. But yeah, we're in trouble basically, all of us, I guess.
Yeah, nowhere to hide, right?
Yeah, well, very little places to hide. Like just a gold, physical gold for just hold it for next 2 or 3 years and see what gives. And
Okay,
the whole idea of that is that if this gets so bad as we think, then you have some liquid assets, so you can buy those highly depressed assets at the near the bottom. That's the whole point
right.
on
Okay.
gold. So you secure your liquid position. Whatever happens to the markets, gold will still trade, or if it doesn't trade, then we're in a stone age, and who cares at that point.
Yeah, then you need, guns.
Yeah, guns and ammo and farmland.
Yeah, and a getaway. Yeah, then go to your farm.
Yeah.
So, what do you think about what the ECB did last week?
Well, I don't think it did much, but
Yeah.
if you think about just raising it by ending the negative rates for how long they were in place from June 2014, so 8 years.
Okay.
Negative rates.
Okay,
And,
so
and I have if you look at the can you see this?
Yeah, the consumer credit as a share.
Yeah, but this is the inflation rate in the Eurozone.
Okay.
Throughout the whole existence of euro.
Okay.
So we are now at 8.6 in June.
Okay. And that consumer
our rates are zero.
Pretty much, yeah.
That doesn't make any sense.
A little bit behind the curve, are you saying?
A bit, yeah, like a record amount. But it's
okay.
But the thing is that the ECB has changed from the. There's only one thing in its mandate, and it's price stability. And it has nothing. The ECB has nothing to do with price stability anymore. It's about conserving the eurozone, through QE or buying enough Italian bonds so the the yields don't break away. That has been its only mandate for the last 2 to 3 years.
To save the monetary union,
yes,
because the fiscal union isn't working.
Yeah,
because there isn't one.
Yeah, it isn't working, and it's a fiscal union would be a very bad idea.
Okay, so your last chart is interesting. Previous chart, consumer credit chart. So people in Europe are living off their credit cards.
This is the U.S. This is the U.S.
Okay, so we're living off our credit cards here.
Yeah, you are living, and you are at the record levels of share of consumer credit. Yeah, and if you think the situation now with the GDP print, so the consumer doesn't have the funds when the interest rates rise. They don't have the the funds to keep the economy going at the same speed. No way. They will cut back because it will hit. Like if you have this is the first time in history that the share of consumer credit as a real disposable income has gone beyond 30%.
Okay, and so there is spillover already happening in the car market. That during COVID, car dealers, because people were getting $4,000 a month for the government, they didn't back check income or anything, and they were valuing the autos at 130%, and people had $800,000-$900,000 car payments that they could pay then, but now they don't have that stream of free money, and rates have gone up and food prices have gone up. So there's there's a storm of repos happening in the car market.
Yeah, that's what I hear. The default rates are really high, and it's like the same in the housing market in 2009.
I think it's only $1 trillion.
Yeah, only $1 trillion. Yeah.
Well, what was the housing? I have no idea what it was.
I think it was it was about the dam. It was 20
trillion.
Yeah, not 20 trillion. I don't remember it now. But
$1 trillion is a big number for the banks to deal with.
Yeah. Like GDP is something in the range of 20 trillion. So yeah.
Okay. So it's 1/20th the size.
Yeah. And that is a big hit because that have repercussions, on all consumption. That's the thing here. Everybody owns a car, like everybody on the house. Everybody owns a car, so it will have repercussions. It will spread.
Right.
There was actually another surprise which went quite unnoticed, that the the service PMI, the Purchasing Manager Index in the US, was below 50 this month.
Okay.
It was 49.3, meaning implying that the service sector is already in contraction. And this all comes out to the fact that the Fed is raising rates, and the consumers have so much debt.
Do you think that, and do you believe that Paul has shifted into neutral?
No.
As of his statement yesterday.
No, absolutely not. I think they are just looking what the data says. In they have a next meeting in September. They are just leaving the doors open. Of course, they are afraid that they will push the economy in the recession, which I think it's inevitable, because you have if we disregard the artificial recession in 2020 between February and April, when the economy was just shut down forcefully, or it was forced to shut down. If you take that away, you have by far the longest expansion in the history of the United States.
Of mankind.
You need to have recessions at time to time. It's just how economies work. They go in cycles.
Right. So we've avoided or shortened every one of them through central planning. We never really went through one.
Yeah.
For
since 2008.
09. Yeah.
08,
Okay.
09. Yeah.
And we didn't really let that happen either. There were so
Nope.
many bailouts, so that didn't really run its course. That was interfered with as well. To shorten, right?
Yeah, that's true. And but another thing which you need to look out for is the you see the new QT has begun chart. I hope.
Yeah.
You see it.
Yeah.
So this is the first drop in this is actually from the Fed database of the St. Louis Fed. So the yield of U.S. Treasuries peaked at around 5,771 billion in June 8th, and now it has declined to 5,733. So the quantitative tightening has started. Okay. That has begun. However, the balance sheet of the Federal Reserve has dropped only, marginally, and this is interesting. I talked with some former Fed insiders, and they said that this is because there's a maturity covering happening in the mortgage-backed securities (MBS) in the balance sheet of Fed, but this will start to drop more heavily in the coming months. And the thing is that for the asset markets, it's not good news, especially when you combine with the recession. So here are the black lines. Here is first of all, this is the balance sheet of the Fed from the January 2018 till I just tried to forecast it till the May 2024, and the black bars here are market crashes. So there's a 2018-2019 crash, then there's the repo market blowout in 2019, and then there's the corona shock. And if you notice that there was a very marginal decline in the balance sheet of the Fed when these markets crashed. And if you compare to this forecast, which is what the Fed expects to do, this is much steeper. And combine this with a recession, which has now effectively started in the US. What do you think will happen to the asset markets in the fall? Nothing good.
Okay.
So this is how the thing. This is the point.
Why do you say fall? I mean, and fall's not that far away. It's less than 2 months away. So you think that the summer is a window for everything to remain sanguine?
Yeah.
And what in the fall specifically, besides midterm elections here, what else could happen in the fall that you think is going to accelerate this?
Well, you don't need anything else. You need just when the rates rise, the housing market is starting to crater. The consumer is starting to pull back. The artificial liquidity in the asset markets is being withdrawn to the QT programs of the Fed.
Are you sure the real estate market is cratering, or
isn't it? Was it in the housing starts was in massive decline?
Oh, okay. I'm talking about housing prices. So you're talking about construction.
construction that this will usually precedes the actual market. So I don't see how the housing prices can stay this low for long. People are
well, the bulls will say lack of supply.
Yeah, that's true. But if you notice the initial jobless claims, they were like 500,000. If I saw it correctly, it was a massive increase.
Yeah.
So people now the kind of job market is turning too. The recession is coming from every single angle of the U.S. economy. I say everybody will notice within the next 2 months, 3 months. So you have the recession coming, you have the liquidity drawing, you have the interest rate, and the inflation still keeps going. There is no way the U.S. economy can or the asset markets can sustain this. So we are estimating, our current estimate is a market crash in October or November.
Okay.
Crash of
that's a seasonal period where those events have historically happened. So
yeah, it's in the same rates as in the 1929 or something like that.
Yeah, it's from what level in the S&Ps? Because right now they don't look that bad, do they?
No. But this was as expected. There would be some rally, a big bear market rally. And I think we're now in the middle of it. It may even last. Well, okay, the GDP it's interesting to see how the markets take it, because it kind of signals that the Fed may be pausing, maybe with its interest rate.
It reinforces what people are trying to have heard yesterday.
Yeah.
Right.
Could it could reinforce that. That's for sure. But it's just the people tend to forget that the inflation has become rather widespread in the US. It shows in the wages and so everywhere. So, and when inflation reaches that point, it comes kind of self-fulfilling. If people have inflation expectations keep on climbing, more or less, the inflation will just feed itself, and you need to continue to raise the interest rates.
Yeah, we need a bad recession, because I think there is price gouging going on just because they can. Not everyone is raising prices because they have to, but they see it as an opportunity because people are getting used to, well, this doubled, this is up 50%, so why not?
Yeah, and people, and it goes everywhere, like in Europe too. But one really interesting thing, and go a little bit over beyond the border of the US, is China. This is China consumer.
I saw that chart. Yeah.
What is this? I have no idea. This is like complete fall off the cliff during the last, in 2 months. It's not just this month, it's 2 months.
Yeah, well, I guess when you can't get your money out of the bank, it doesn't instill confidence.
Yeah, that's true. And when you are locked down in Shanghai, or
So you know what this means to me, with all the stuff that's going on about Pelosi's trip, and she would lose face on this, that they have an awful lot of probably unemployed men, especially with their one-child policy where they can't find wives to put in uniform. That's what worries me.
Yeah, that's true. But the other thing is that we have a China researcher here in Finland who's been speaking a lot about how China has a revolution, or has had a revolution for every 70 years for a long time. So after 70 years, there's some kind of a revolution. And the China Communist Party was set up in, I think it was 49. So they're kind of overdue a few years already.
Okay.
So the thing is that China,
people are still buying Chinese internet stocks, and it's working.
Yeah, of course, and I think the tech sector is looking rather good in China, actually. But it's the whole other economy.
Yeah, because they're easing.
Yeah, they're easing again. Yeah, I just looked at there's been a massive increase in the social financing again. Or the financing of the Chinese economy.
Xi making an about face on trying to tear down big successful Chinese tech companies.
Well, that too, yeah. But I think there's a a wider kind of clampdown going on in China, just to try to, it's preparation for the imminent or the recession that is inevitable in China. And they try to get the people in such a tight grip that there will not be a revolution. I think they know their history very well. And what will happen, like if these men, of course, the other option is to put these young men into uniforms and go, fight a war outside China. That's naturally an option.
Do you think that's going to happen?
I don't know. We don't. It's a China. The policy of China has been to kind of build its empire behind the scenes, through finance.
Yeah.
To the Belt and Road Initiative, and there are actually even projects here in Finland, the tunnel that should go from Helsinki to Tallinn under the Baltic Sea. And there's one option, a financial option for it, which would be based on Chinese money. So there's Chinese money everywhere, and they're trying to own the infrastructure in many places. So if they would change that to a outright war, I don't know how well that would play in the China would be an aggressor after that. It would certainly have a serious effect on these projects. So, but what I'm thinking, that if the war in Europe somehow escalates, which we of course do not want it to do, in that situation, if the kind of the world is dragged into this, fires again, if you may, then I think China might act. But before, I would consider it unlikely, because it would seriously hamper the long-term goals for China to have a bigger control of the world. But that's my take.
How long is it going to take now that the Ukrainians are even talking about a counteroffensive, and the U.S. is sending missiles that have 180-mile range to the Ukrainians for Putin to, I talked to somebody, and his philosophy, it was Harold Milgram, said that Putin escalates to de-escalate. Okay, so to put some fear into the hearts of people supporting Ukraine by using a tactical nuke in Ukraine.
That's we don't do such forecasts, but it's of course everything is possible. What they are doing now is that they are preventing Germany and other countries to fill up their gas storage. Yeah. That's what they're doing, and they are playing the. And this is like.
I'm surprised they didn't wait till winter when it would even be worse.
Yeah, naturally.
More leverage.
But the thing is now that to prevent them from filling up their strategic reserves of gas. That's the point here. They wanna stop that from happening, and that's why there are problems in the Nord Stream, for example.
Okay.
So the tanks are not full when the winter comes, and then Putin would have the full might of this energy weapon he has. And this is something that it's really strange to me, because if you people are saying, oh, this is horrible that what Putin does with the energy thing, but this is something that he would naturally, of course, do as a counter sanction to everything else. This is how he has played out. Russia has played this game for a long time. This should be no surprise. And I don't think basically no time in history you could have coerced or forced Russia to do something with economic sanctions. They just don't abide by those. So what I think what we are just doing is creating very hazardous situation in Europe using non-effective sanction against a totalitarian regime. So the war is won or lost in Ukraine, not in the pipelines going from Russia to Europe. So I think this is a policy mistake to go to these heavy sanctions, because they will not help to get us into the goal of ceasefire in Ukraine. They will just create a massive chaos and havoc in Europe in the coming winter.
Okay, and there's already some splits. Spain doesn't want to share the pain of cutting back because they had better energy policy. And maybe this is Putin could fracture the alliance by one of the countries making a deal with him.
Yeah, for sure, he could do that. But let's remember that we have Germany and in most of Europe, we have deliberately handled Putin this weapon by doing these green policies for 30, 40 years. It's our own mistake. I don't see how like we've been living next to Russia and Soviet Russia for 100 years. So we know how to play with them. Don't ever give them any clear leverage.
Yeah.
Don't do it unless you have something else to put, there should be a balance between leverages. And I cannot understand how German leaders could have been so stupid for so long that handling all the power of, and people many don't realize that if the gas is shut off going into Germany, the houses just don't turn gold. They have to turn down or run down complete like industrial sectors, because they use gas so heavily. We don't have that problem in Finland, but in Germany, if there's gas shortages, they need to shut down the economy. It will be a depression, a massive one in a cold houses. It will be utter devastation of Germany in the worst case.
Okay.
So this is looking really bleak for Europe. One more thing. I'm showing Germany for now. Okay, so this is
keep cheering me up, buddy.
I will. So this is the IFO business climate survey in Germany, and as you can see, Germany is probably already in recession. The business expectation have collapsed as it is the business climate, and the business situation remains somewhat stable, but expectations are just falling heavily. And this is the situation in basically whole of Europe now. And when the ECB starts to raise rates in the September, it seems I don't know, the situation in Europe is so bleak. I never seen it like this. If you look forward, there's very, very narrow path going through here, which could lead to any good outcomes. So I'm fearing that we will face not just a depression in Europe, but a complete collapse of the monetary union, and that would be the biggest currency shock in the history of the world.
They have one more backstop, in my opinion, Thomas.
Okay.
The Fed. The Fed, Bernanke said that the Fed could buy foreign securities.
Yep.
That was true. Within their purvey. Yep. And I think the Fed would come in and help the ECB. And the Fed's going to come in and help the Japanese. We can strengthen the yen and strengthen the euro.
Yeah, that's
so
good.
There might be a central bank play in between that delays it a while. What do you think? It's
possible, but I don't. That's one thing that the first figure I mentioned about the quantity figure and quantity tightening. So what one Fed insider said that they will not sell the assets in their face value because it would create a loss. Yeah. And if they continue selling these assets, there's going to be a massive loss, which have to be written down. The thing is that the central banks are in a very tight spot now with the inflation, all the bloated balance sheet. So the question, could Fed step in? Probably yes. Would it? I don't know. And the always monetary unions flourish or break through political unity. And if that's lost, it basically every time in history the monetary union has broken up. So it doesn't matter how much money goes in, if there's no political unity to continue, it will disintegrate. And this is a real risk within the 2 to 3 years, which should be acknowledged because it would be a massive shock.
Okay, Thomas Mellon, everybody, and he's been predicting what's happening here now. For the last couple of years, saw the storm coming. Now we're in the storm, and the Fed's going to see if they could put everything back in the bottle.
I don't think that's going to happen. Yeah.
Pandora's box is open, and like Stelio says, and a lot of people own gold. Don't worry about the price. You might need that insurance someday.
Yeah, that's my advice too.
Okay, and Anthony Kanakis enjoyed it. Thank you, Thomas, for being here. Khalid enjoyed it. And there's a You ruined the party that we were all having yesterday.
I tend to have that.
You know, you could always count on Thomas Mellinen to take away the punch bowl every time I talk to him.
Yeah.
But maybe in 4 years or so, maybe we'll be celebrating. Come out the other side of this.
We will, and I will be. I promise you that I will be the first one to really tell you that this is going to turn now.
Okay. All right. Looking forward.
Yeah, looking forward
to the future.
Yeah.
Let's just, you know, fast forward all the way through to there.
Yeah, 4 years ahead, and yeah.
All right.
Okay.
All right, buddy.
Thank you,
so much, Thomas.
Yeah,
Great
talk
talking to you. All right, everyone. That's a wrap. You could join the team in 15 minutes for the morning edge, and you know, be grateful for today. You know, today is enough to worry about. Don't worry about tomorrow. Do the right things today, and tomorrow will take care of itself. And I'll see everyone. We'll wrap it up. TGIF tomorrow, and I have a new guest, and the reaction to me inviting him was pretty strong. So Orkin will be with us tomorrow. Adios, everyone. Don't just count your pips, count your blessings. Thank you, Thomas Mellinen, and I'll see you F.A.C.E community later.